Good morning and welcome to today's pre-market report. Now, I hope all had a good trading session yesterday. In the Nifty, as I had given a support of 23,620 and said that is key. And we spent the whole day trying to break below it, but could not. In fact, the low was, I think, 23,612. And we ended up closing above it as expected. As I had said, until we break that, we're not going to have a big fall in the Nifty. And anyone who did that same strategy which I shared for option selling and option buying would have made good money yesterday. Now, coming to today's video. Now, in today's video, I'm going to take only a look at one stock rather than 2, 3, how I look at them. This is, I'll focus on TCS as it gave its results out. And I think there's a lot on the chart when we look at it in terms of short-term trading or in terms of medium-term trading. So I'm going to cover what equity investors should do with the stock, plus what option traders, option buyers and option sellers should do, plus a quick jiffy look at the results and what really is the crux of it. Now, before that, let's take a quick look at the news. Now, I'm looking at the news as I'm not going to focus on really what's going to affect us today, but what is going to be affecting us over this weekend. This is a lot of people on Friday, even I personally, me and clients will be taking most likely fresh option positions for the indexes, Nifty and Bank Nifty, this weekend for option sells. Now, I think everyone should pay attention to one thing, which is to basically on Friday night, the US non-farm payrolls report is going to be coming out. And that, I believe, will cause a big move in the American markets for only two reasons. Number one, if there is a strong payrolls report, before in fact that. Now, why I'm also putting this as a crux is that this is going to determine how the Fed behaves for the full year. This is the last Fed meeting, and even the minutes which came out, they said they only want to do 50 basis points rate cut in 2025. And this is what is going to determine that. And why there's a bit of more confusion over the non-farm payrolls this time, as there are 4 points for strong payrolls and 4 points for weak payrolls. Like the 4 points are ISM services jobs have stayed unchanged, 4-week claims lowest. The Michigan consumer sentiment is highest since April, drop in continuing claims. And the negatives is the ADP is 122K versus 146K, drop in manufacturing jobs, rise in jobless claims, and the conference board sentiment higher. So it's a complete mix of everything. So if the non-farm rolls gives the upside good surprise, then that will be good for the US dollar, but bad for US stocks, which will be in turn bad for us. Because the Indian market has already been smashed by bad regulations of SEBI, bad regulations of taxation, poor GDP numbers over the past few months. So this will be basically give it another hit, because US stocks will be hit. FIs will again resume very heavy selling and will take our markets further down. This is if the jobs report is good. So basically, as that will be number one, why I say bad for stocks, it will confirm that the Fed will stick to the 50 basis points rate cuts, and the stocks will not react well to that, but the US dollar, the forex traders who are trading USD, will be able to just go long and continue going long. On the other hand, if it's a weak jobs report, then the US dollar will naturally take a hit. And I think it will take a big hit then, because it's severely overbought. It's been rising against every currency across the world, and that will smash it, but that will actually be good for the stocks. So the guys trading the equity markets in the US, or the indices like how we're trading Nifty and Bank Nifty, they actually want a weaker job report, as that will help them and in turn help us. So that is why I'm taking a look at the non-farm payrolls in a bit more detail than I usually would do, as I think anyone who's taking positions in the Nifty and Bank Nifty should pay attention to this, as it will decide how Monday's open is going to be in a big way. Now, on to our the stock we want to discuss today, TCS. Now, TCS has released its earnings, and the revenue basically has come out better. It actually met estimates. It's come out at 63,973 crore versus Q3 FY 2024 when it was 65,803. So an improvement. The net profit has also risen basically to 12,380 crore from 11,058 crore. Another thing which a few will be excited about is there's a special dividend of 66 rupees per equity share But I don't think that's a good dividend because it's a 4,000 rupee stock. 66 rupees is nothing. But the most of the dividend stocks are not giving that much. So guys who are doing dividend investing will appreciate it, I would say. But I think it's a negligible amount of people, plus it won't affect it much. Now, what are the points I believe are important for TCS this time? Number one, the big positive I see that is the first time there's been a headcount reduction in 19 years. And this is a significant stock change, as since 2004 when the stock debuted, this has not happened. And that, I believe, is a positive. But the reason why I would say, okay, there are few people, not few people, I would say most people who are going to just look at the numbers and just say, okay, bigger net profit. But the guys who look at the funds and everything, they're going to look at it at certain factors which are not good. Number one, okay, the profit has increased, but the rupee has been declining. So it sort of balances out. If you look at the percentage of increase of net profit and percentage of decrease in the value of the rupee, it sort of balances out. And that's not good for TCS. It rather makes the results flat rather than the positive spin which has been given by people on mainly like CNBCN, Z Business and these type of guys. Then another thing, which is the gross margin. The gross margin has had a year-on-year decline of roughly 4.8%. So what does this really mean? This means that TCS has to spend an extra 4.8% to earn the same revenue it did as last year. And this is with a weaker rupee now. Plus, the pricing power advantage of TCS has declined by 4.8% within a year. So this, since basic gross margin is a direct measure of efficiency, this is something that I believe will be affecting TCS as of now, and I think it's something which most will not pay attention to, but the guys investing serious money, they will have looked into it, and it's something which will affect TCS in the coming sessions. Now, what about the technicals? I usually don't cover the results and everything in such detail, but today I've had to do because I think TCS results are positive on it's a pretty girl with bad behavior. That's what I would put it. Now, how I look at TCS, now the last time I covered TCS, I've maintained the same levels as then. Now the last time I covered TCS, I had said that I'm selling calls and puts for basically the January series, and I sold calls above 4,200 and puts below 3,980. Now I've maintained the same position so far, and it's anyone who did that also would be in a profit, as it going range bound within this range has given a decent profit to option sellers. But now what I have done for this result season, I have maintained my call sales above 4,200 but lowered my P sales to below 3,900. Why? This is, I believe, any up move. I'm not looking at this in terms of exiting it just today because the results are released and there's going to be a market reaction. This is for the January series. Now, I've put a profit stop since the calls are in profit, but I don't even think even if there's a positive open, it will be really affect and hit that, because I believe any up move to 4,200 will be met with the resistance. It might stay above it for 1-2 days, but then it's going to come down. This is, I expect TCS to continue trading roughly within the box range of 4,200 to 3,900. That is why I've changed my put sell position but not changed my call sell position. So as an option seller, I'm looking at it that I expect it to continue being between 3,900 and 4,200. Put sellers will only get into trouble if 3,900 breaks, and equity traders too. Call sellers only if 4,200 breaks and it sustains for more than 2 to 3 trading sessions. If it does not sustain for more than 2 to 3 trading sessions, then TCS is not going to go anywhere in the bigger picture. Now, why do I say that also? If we hide the levels and we just take a look at the weekly chart, for example, of TCS, we'll see that TCS has been largely range bound for quite some time, right? So now we have basically reached why I'm saying that the level which I have given of 3900 is that important. If you look at it, 3900, okay, might be a quant level. I'm not drawing it on the surprise supports which are on the chart, but it's matching with the low. It's slightly below this support which has been holding it up. So if that breaks, TCS will be going down for spin for the coming trading sessions. So that's how I'm looking at it. So for January series, I think so far it is going to be secure. But for the next series is where it's going to be a bit tricky, and I think call sellers will have better time in February series other than January series. So now next, my immediate trading plan for this coming week. Now, as I said, according to me, within this zone of 4200 and 3900, I just expect jewelry moves. So this is more of an intraday trading zone. I don't think anyone should go and start buying equity shares of TCS right now unless they're going for the dividends. Look at the record date and everything and buy it. But according to me, it's not worth equity investment right now. This is, even if it breaks above 4200, it can max go to 4300 and 4400. If you go to 4400, okay, you'll get a decent profit. But if it goes on to 4300, you're not going to make much. The risk reward is not in your favor even if it goes to 4400, according to me. On the other hand, by chance if it breaks 3980, then it's for option buyers, it's a short to 3900 and then a short to 3800 if 3900 breaks. So I've shared my trading plan for option selling, option buying and equity. Again, I'll say equity, I don't think TCS is worth it right now. Option selling, I think is the more preferable stance for TCS this month, as it is in that zone where it's going to bounce around on both sides. So you're going to have bullish and bearish candles within a range, and option sellers will make easy money doing that. Option buyers, this is more of an intraday play. If you try to trade TCS according to me in positional, as an option buyer, you will lose. It's simply not, there's not that much of a range to benefit option buyers and equity traders. It's purely an option seller's stock. For January series, I think February series is when it will open up more for option buyers, and option sellers will still benefit but not equity. And that will be analyzed in the coming videos. Why is that? So that's it for today's video. If you liked it, then do hit that like button and subscribe to the channel, and also hit the notification bell. Also, if you have any stock that you think is worthwhile to discuss, drop it in the comment section below and it will be covered. Thank you.